this webinar presented by Terra Equity Group on our latest offering, Fairfield by Marriott. And today we will discuss this opportunity, which is a limited opportunity. So we urge you to act fast if this is something that interests you. I'm going to talk a little bit about what this property is, why we find it interesting, and we're going to have a few panelists on the webinar today that we would do a Q&A and kind of get their feedback and their thoughts behind why we are going after this investment. So to get started, I would like to introduce our CEO and founder, Vino. Vino, if you could talk a little bit about the opportunity and kind of sum it up some high level, and we're going to get into the nitty gritty afterwards. Then we can, address a lot of those. But give us a high level overview of this opportunity and why do you find it um, interesting? And, for our investors, if you can give them a rundown as to why this opportunity resonates with you.
Well, we've been doing commercial real estate that includes apartment and shopping center for last 25 years. So we were well versed in apartment buildings and commercials and anything to do with office and everything else. We never, were involved in a hotel business, So we have a friend came across and he said, "Hey guys, I have this opportunity that I'm acquiring as a brand new hotel that was built in end of 2023 that they got CEO and they wanted to bring us inside. And we thought that we have all asset class that covers the monthly rent, covers the 3 or 5 years leases. We didn't have something that we can bring it to our investor that daily rate changes. This hotel was unique. It's first of all is a mid-scale hotel, Marriott brand that caters to everyday people. And being in Florida for the last 35 years, we realized that market is very hot. There's a lot of visitors in Broward County. There's a lot of events on Emerald Bank Arena where all hockey players plays. There's concerts going on. So it's like less than, 10 minutes away from there. Also, I-75 that travels through Miami to all the way to Tampa, that road is close to the hotel. Was brand new. Hotel is located on a golf course, so it was an attractive, place to stay when you're in Broward County. And also, in surrounding areas, this is the first hotel after 12 years that got built, and also a event facility next to the hotel that also attracted us when we were looking for this hotel, that brings small gatherings together, meetings where the people come out, meet. They need place to stay. People who are playing golf tournaments and they're coming out and staying there. People who has weddings, people who have other events like birthday parties or something where the guests are coming from out of town. So this was a unique situation for us to acquire a brand new property. Florida or South Florida is poised to, increase the tourism. We got a lot of tourism where we have beaches are very close to this property. We have, arenas is close to this property. Miami is 15 to 20 minutes away. Airports, you name it. And we thought this going to be a unique situation for our investors. When we underwrote this property, it was like 70%. We said, okay, average is going to be occupancy 75%. But we saw recently that this hotel is already trending 95% occupied. And also the rates, we will have a flexibility. So if some events, some big events are coming in, so average, rent or per day room rate is like around 150, 165, but sometimes it can be increased overnight another $100. So we thought this was a good business model where we can support, and we have a good partner who will manage this hotel. They've been managing last 30, 35 hotels for last 20 years. So they're expert in managing sites. So at the we just decided that this was a good marriage and we produced the good results for our investors.
All right. Well, thank you on that, for giving us a very high level rundown. And now I will talk with Karan and kind of get an idea and sense of what the property brings. So Karan, if you want to kind of talk a little bit about the property, some of the details as to, how many rooms and all of that, go right ahead.
Yeah, absolutely. So like, but I do want to start off like, said, we're very excited about this property. There's a lot going on that leaves room for a lot of growth, a lot of opportunity. So, and that really starts with the foundation of the property. We're looking at a property that's 120 rooms, a lot of flexibility when it comes to corporate events, any sort of weddings, venues, things like that, right? Especially with remote access or very close access to Miami, Fort Lauderdale, and all of the other amenities that mentioned. Having that room size or the room quantity in that hotel is crucial. It's a 5-story building. We've got a variety of different room types as well too. Plenty of parking, and it comes standard with the complimentary breakfast and a sun-dry show. So we're going to get into like the actual specifics of the property as well. You'll get a chance to look at the rooms. It's a pretty even room mix. About 40 in the mid 40s for the king and queen size room. You have more of the king suites, and then you have a couple of the queen suites as well. And you'll get a chance to see kind of exactly what these rooms look like. So this is an example of the king and queen rooms. These are your standard rooms. You have the king size bed in the king room, two queen size in the queen room. This is what the majority of the property has. So, these come with a pretty decent sized living area, sitting area, fridge, microwave. So everything is a nice package for those rooms. You're not really lacking any sort of amenities there. And then as we go towards the suites, obviously you have a lot more space, but then you also have a couple more complimentary features, things like that as well too. So you'll get a chance to see the king suite on the next slide. So it comes with a king bed and a sofa bed. And then on the slide right after is the queen suite. So that one actually comes with two queen beds and then a sofa bed as well. So a lot of air, a lot of room. This is why this one is the only one that has two of the rooms in there. But a good room mix that we're really excited to see kind of how this plays out.
And I think Karan already alluded to a lot of this stuff, but I'd like to sum it up. In summary, the hotel, it's an everyday hotel for everyday people. And the best part is a brand new hotel, that smell of newness, uh, I can certainly speak from my experience, whenever I'm booking as I'm traveling or for a short-term stay for business or pleasure, I'm looking for a newer hotel. And that certainly is what driving a lot of the business and a lot of the consumers that are coming to this hotel now, as we just opened in November. And as Vino mentioned in his piece, that we're already hitting 95% occupancy when we had originally underwrote the deal at about 72 or 75% occupancy for the first year. That's a very conservative, and number to go off of in our underwriting. And to kind of add, has state-of-the-art fitness area. You have complimentary breakfast in the morning, a nice workspace as well. Beautiful pool, which is on a golf course, as Vino mentioned. So a lot of good symbiotic relationships that we have with this hotel. The golf course is owned by the city. They do manage it. They have some meeting space as well that is associated with it, where they have a restaurant and they have a meeting space which can accommodate small weddings, uh, you know, small meetings as well. We have uh, like the teachers union from Georgia or Alabama. We recently had their annual meeting there. So that is something that really adds to the allure of this hotel, where you have the meeting space and the individuals that will be utilizing that, we provide a good accommodations for them, which is just not even like seconds away from there. So, uh, it works well for us and it works well for the project as well. So, uh, we're going to get a little bit, I think Vino did talk about the executive summary, but if there is anything here that we missed, Karan also mentioned 120 keys we have. It's a desirable room mix, great opportunity. And here we have is we're acquiring the property for about $25.5 million. And we're looking to raise 9 million, and the minimum investment amount is about 100,000, and we're looking to hold it for about 3 to 5 year, where we're looking to generate some nice returns for our investors. And we'll get into those numbers as we progress forward with the webinar, but just to give you a very high level of where the project stands. Vino, I will now a little bit talk to us in terms about, I know you mentioned some of this stuff in your high level summary in the beginning, but what is or are some of the highlights that set this project apart from some of the other ones, and some of the other projects that are existing in the marketplace right now, given the type of market we're in and the capital markets that we are facing. So kind of talk to us in regards to that.
Well, one main point comes out, we have a, favorable financing where we're getting at the 6%, where you can't get a financing on a brand new hotel at the 6%. So the financing is a favorable item. Second thing is, being is a brand new, there's going to be less expenses, maintaining the property or doing something, the work that needs to be done, because the construction cost and everything is really, when you're trying to do a rehab and everything, is it's like a much more than it used to be. So that way, it's a favorable for the investment. It's a passive investment where you expect the money to, we wrote it very conservatively on these things where we're saying, this is what's going to be average. But looking at or doing the market research for all the hotels in South Florida for last couple of years, they've been really, really producing a lot of cash flow. And that's what we expect from this property, to have a lot of cash flow where our investor can enjoy the returns on this project.
To summarize it, so you mentioned financing is a key piece in this deal, or the structure of the deal, that we're getting a crazy rate in today's market, and which is really going to set the tone for the returns and how this whole project pans out. You talked about expenses, which is basically it's going to be a very minimum. We're going to be running it very tight because it's a brand new construction. We don't anticipate anything coming into in terms of rehabbing, fixing, or a value add that may need to be done. You talked about the underwriting that we have done is a very conservative underwriting, and then certainly which would yield to a higher than anticipated cash flow. So all of these things bode well, and I think really create a good structure and a foundation for this project going forward.
Another piece I wanted to add it that we didn't add it before, that the builder, they did your typical hotels, but we're planning to put a solar on the top where we do a major savings on, and let's see how this will work out. But our goal is to make it 100% electricity free, where we take all of the electricity and everything from the solar. So that cost is tremendous for usually for the hotel. So where we will, once we finish that project after taking over, that will give a very much better advantage, better returns, and also some major depreciation because of the solar. And we will also scale down the expenses that we are seeing today in this projected cost.
Awesome. So I've brought up the screen that talks a little bit about the pro forma and what we are anticipating in the various years to come. It really breaks it down as to what we see the year one and going forward, and the type of returns that we are going to see. So again, this would be available to you to digest in much detail in the pitch deck. I'd like to draw your attention to what the return is going to be looking like when we exit. So here we have done a little sensitivity analysis of the various exit points that we can exit this project, depending on the cap rate and the market. We're anticipating to exit at a 5.5% cap rate. Vino, talk to a little bit about us in regards to that exit, and what type of returns can we get from this particular project on an annual basis, and what are we looking in terms of the preferred return? So talk to that, and maybe you could go into what's our structure with the investors, what kind of splits do we see? Is there a promo? What's the waterfall looking like? So get into a lot of those details, because I'm sure a lot of folks have questions in regards to that.
Well, usually when we're doing the projections and today's market here in South Florida, all the hotel markets, they're around 5 caps, some of them maybe 5.25, but being brand new ones, we're projecting in 3 to 5 years out, we're projecting that we would be able to sell it at 5.5 cap. The worst case scenario is like 6.5. The best case scenario is 5. We went in the middle saying, if we sell it at 5.5 cap, we're projecting, almost average 21.8% return annualized basis where we have NOI at that point. We're projecting what the exit price would be, all the expenses and everything. After that, the investor will enjoy 109% return on only on the sales price. So that comes out to be almost 22% annualized interest rate. Also, on the first year, they will get some heavy depreciations on this asset. So those are not calculated here, but 22% annualized based on sale price only.
Okay, so again, you are not taking into consideration the cash flow that they will be getting in this number, and there's a slide that will summarize everything in there, so we'll get to that shortly. But I did want to highlight the point that Vino mentioned regarding the depreciation. And as of note, I know they were going to do away with the accelerated depreciation, that it was going to fade out. I think Congress had just recently voted on buying another 5 years on that before that clock starts ticking. So we got some time on that. So we can still do accelerated depreciation, what we typically do with our assets, which is a cost segregation study, and we'll take that depreciation and we pass it on to our investors. So that's I guess the cherry on top of the gravy that is not baked into these projections that we know is talking about, and it's the extra that we provide to our investors that they can certainly take advantage of. They can carry it forward. They can, use it as to offset their active income if they're full-time investors, or as a passive investor, when they exit or have some capital gains. But again, I would reiterate that please defer to your tax advisor or CPAs for legal and tax advice. We can just kind of share what we do, but how you act upon that is completely upon you, and we would highly recommend you talk to your respective advisors to gain more clarity in your particular situation and specifics that pertain to you as an investor. All right, so with that being said, I think this is the slide that Vino was referring to, where we talk about the annualized percentage at exit, which was about 21% at a 5.5 cap, but taking into consideration the cash flow that Vino was talking about, this is what you see. Vino, if you want to, talk a little bit about the numbers here, and then we can jump in. And I think there's an audience question, which I would like you to answer. So.
Well, in the cash flow side, initially for year one, we're projecting a lower cash flow because we wanted to make sure that everything what we're saying, we're projecting and we're distributing. We're not telling investors that we can give you 8% in year one when we underwriting this deal very conservatively. But going in the future years, we're expecting the cash flow to increase tremendously. And also, like I talked about, even alone, saving expenses on electricity and everything else, we will see a higher a higher number in our cash flow where we can able to distribute higher cash flow from here. We did it, year one, we were underwriting the property as 75% occupancy. We see at a 95. So I know we have a tremendous growth, but we have not updated year one cash flow as of yet. We're going to see maybe within a month or so we can update that. But that's what is example purpose. That's what we were showing. But whatever the cash flow comes in, it will be distributed among the investors.
Okay, so, and I think that was what the question was along the lines as to if we are already seeing 95% occupancy and where we wrote 75%, Tom is asking, what do you see? How is it doing in terms of average room revenue? So to kind of answer your question, and Tom, we don't have the full year's financial. Obviously in hospitality, there's highs and lows, there's busy seasons and there's non-busy seasons. So we like to get a very good idea of what that looks like in year one. So we will stick to, in terms of what we have projected for the distribution in a very conservative manner. And as Vino mentioned, if there's excess or surplus cash flow, we certainly have no intentions of keeping that within, if it makes sense for us to distribute, we'll certainly go ahead and take care of that in the distributions and, share that extra profit sharing with the investors. And, I may have missed this, but did you talk about what your splits are with the LPs and the GPs? And are there any the waterfalls, are there any caveats that the investors should know at the waterfall, or is it a straight down the middle split or what have you? Just to
And it's
clarify.
straightforward that we do, between 65 and 35 split. So that's always straight. So there's no confusion. Any revenue, any, capital gains, anything that comes out, the investor will receive 65% of that. And general partners will receive 35% of that. Now, general partners will not take any cash from the cash flow unless we meet the requirement for our preferred partners or, our LP partners.
Okay, so that's great. So we will forego as general partners, you're saying, our cash flow if it does not if it does not meet the minimum preferred return requirement for our limited partners, which is the A shareholder. So that's good to know. Shows us that, we're in this with them. And I believe we have another question. Layla is asking, you mentioned you might do some CapEx for the solar panels. Are there any CapEx projects you have in mind to drive additional value or cash flow outside of that project that is new to the property? I mean, given that it's a newer property, so outside of that solar project, is there anything else that we are anticipating to do as a CapEx? Do you want to chime in on that while I move to the next slide?
And with the solar thing, we may wanted to add some parking for our guests so they can charge their car. These days, everybody is moving towards electric vehicles. So we will provide that as a benefit, but that's not the, like revenue. It's indirectly that people would like to come and stay and say, okay, if I'm driving my car and is electric car, then I might as well choose the hotel that has all those facilities there.
And that's a great point. So charging stations certainly can, in today's day and age, can make or break a prospective consumer's stay at a particular hotel, because if they have a facility or a ability to charge, that it can certainly can drive them toward choosing our location versus competitors. So great point there. And now I'll just draw your attention to what Vino was alluding to earlier. In terms of the returns, we have two different investment classes, A1 and A2. The A1 is a minimum investment of 250,000 or more. A2 is a minimum investment of 100,000 and up to 249,000, where you're getting a 7% preferred return versus the individuals who are in class A1, they are getting 8% preferred return. So that's a distinction there. Gives a little bit more incentive for people coming in with a higher amount. So I think that's pretty self-explanatory there. I will move on to a little bit about the business plan. So Viraj, can you tell me a little bit about the business plan with this particular project, what we plan to do in phase one and phase two, and kind of walk us through what's our strategy there, and what's your thoughts on that?
Sure. So initially in our first phase is going to be highlighting the qualities of the property. As Puneet's mentioned, as Vino's mentioned, we want to bring these, brand new amenities, cleanliness, all of these plus points of this hotel offering to the forefront to, any consumers, any people who are coming in. So we're going to develop a strong brand presence in the area, emphasize on our marketing strategies, making sure, people who are coming into the area know where we are, where we're located, make sure that that they know that we're centrally located to all these many activities that are available in the area. Secondly, once we bring those people in, we want to make sure that they have a great guest experience. We want to make sure that, when they're coming in, there's great customer service, all of their needs are being met. Any concerns or questions that they may have are being taken care of. So that creates a raving fan mentality. They, next time they decide to book in South Florida, they're going to, have a highlight of this hotel and they're going to want to come back. The second one is going to be our business to business efforts. And we want to identify potential corporate clients, host events. There's a nice event space located nearby. The golf field that's next door to us is one of the best in the country, so we want to capitalize on whoever's hosting those events, making sure people are coming in, they're staying there. And we want to build great partnerships in the city, along with other businesses that may be outside of the city. And, that'll be our phase two. Phase one will be internally, making sure everything is good on our end, marketing to people, having people come in. And then the phase two will be focused more on businesses.
Perfect. So all great points there, kind of focusing on, the brand presence in the beginning to build up that loyalty and that customer base, and then ultimately capping off with more B2B marketing and appealing to other businesses and showing them the advantages that we have over some of our competitors in the area. So all great points there. Um, a little bit, let's jump into the area outlook and kind of what sets this apart from all of the other hotels. So I will have Viraj kind of talk a little bit about that and
Sure.
kind of tell us why this seems to be uh, the premier hotel destination, as Vino mentioned, everyday hotel for everyday people when they're coming in and staying on a day-to-day basis. Why and what makes this attractive, and just to kind of highlight, the subject properties here where the big S is, and that's where we have our hotel. That's where the Colony West, that meeting space is, along with the restaurant that they have, and then the Champions Golf Course where the property sits on. So all nicely, packaged together as one
Big
under one
offering.
kind of area. So go ahead.
Yep. And so to piggyback off of that, as you can see, we're centrally located with a lot of amenities nearby. You have hospitals nearby. You have Fort Lauderdale Executive Airport nearby. You have casinos, colleges, shopping. Sawgrass Mills is one of the biggest shopping centers in South Florida, if not the biggest. And we also have obviously the top 50 golf course in the area, with the hotel being the first one built in 12 years. It offers us a competitive advantage in the area. Not to mention, Drive Pink Stadium, Amarant Arena, where the Panthers play, their Stanley Cup favorite. And on top of that, Drive Pink Stadium is where Inter Miami plays, the soccer team. We have, international fans of Lionel Messi, Luis Suarez. The team has become an international phenomenon and draws a lot of attraction from South America, from Europe. So, we're 15 minutes away from there. Having a hotel that offers a great environment that's around, it's advantageous to other hotels, especially us being the newest one out. Now, we had projected, in the pro forma, we projected the 70%, but so far the hotel is projecting around 90% and 95% as since open. And it's a brand new hotel, like we mentioned. A lot's going on in the area, 75,000 square feet under construction, businesses coming in, office spaces. We have 13 million overnight visitors in Broward County, and that provides us, a good pool to bring people in from. Not to mention $8 billion being spent tourism wise in Broward County. So that's all very exciting neighborhood facts for what we're dealing with in the area.
Uh, uh, I think that's great to kind of summarize what's happening here. So as you can see, a lot of activity here happening, a lot happening with the city of Tamarack, which is, done a bunch in terms of construction, bringing in new housing, apartment complexes, new sports complexes and so forth and what have you. So a lot of that, and they're really working with us at the hotel to drive a lot of that tourism that Raj alluded to, and they want us to be the the flagship and the center hallmark of their city, since we are the newest and the brightest gem right now there in terms of hotels that are new construction. So moving into that, Karan, do you want to talk a little bit about the area outlook? I know Viraj mentioned a lot of that, but you can kind of walk us through what's nearby in some of this, the property and where it kind of lays. So just, hammer down some of the details that he may have missed.
Yeah, absolutely. So, like Viraj mentioned, there's tons of areas for anybody who's staying there to get to. Drive Pink Stadium is huge. Really want to emphasize how the growth of just soccer in general in South Florida has driven a lot of traffic, tourism, all of that. But then also on the flip side, directly around the hotel, we have plenty of parks, complexes. We have easy access from both airports, Fort Lauderdale Airport as well as Miami International Airport. And then even on the smaller scale, there's North Perry Airport and the Florida Executive Airport as well. So sorry, the Fort Lauderdale Executive Airport as well. So there's plenty of ways to travel to South Florida. You're never too far from from any of them really, especially at this property. In addition to that, plenty of restaurants, cafes nearby. The Sawgrass Mills Mall being there is huge. It is one of the biggest malls in South Florida, if not the biggest for now. And it really does drive a lot of tourism. A lot of people that are visiting go to that mall, do a lot of shopping over there as well. So having an affordable hotel nearby is a pretty big stepping point there. And then on top of that, we have a couple of museums. The Museum of Discovery and Science is nearby, Museum of Art in Fort Lauderdale. So there are several attractions there as well too. So overall, there's plenty of things to do near the hotel. And I think Viraj really highlighted a good amount of what's there.
Let me unmute myself. Karan, we're going to talk a little bit about ourselves and our value system here at Terra Equity Group. And you can chime in on that as if he forgets something. And since you are the artist behind this and the maestro behind who started Terra Equity Group and your vision when you had started the company, so I kind of want you to lead into that, and then Karan can get into what we do, how we value things, and from there I want to segue into what our consumers are thinking about the hotel. So we'd like to pull up some maybe Google reviews and see what they have to say about the hotel. And maybe we can do that while we're doing the webinar so everybody gets to see the type of reputation that we're already building up and what our consumers are thinking. So we'll do that. But first, Vino, if you can kind of just walk us through about your vision when you thought about Terra Equity Group, when you started it, and then Karan can kind of lead into in regards to what we do today to kind of embody those same value system and to carry the legacy forward with Vino being in the driver's seat.
Well, when we started Terra Equity Group, our vision was that creating capital preservation. I've seen a lot of investors that they, invest in the stock market. They don't have certainty, and I think we being in this business for 10 years prior to we starting Terra Equity Group, we realized that real estate is the vehicle that gives people continuous, capital preservance, taxes, gives a benefit, upside, everything was there that we could ask for. So we just wanted to share with our friends and family, and that's where it started sharing with other people. Initially, we didn't want it to raise capital from anybody and just use our own capital, but then we realized that the market was big enough and we can support other people, and the people who are busy on their day-to-day business or doing jobs and professional people, we wanted to bring them together, make them part of our families, and enjoying with them. We have gone through ups and downs in a couple of markets. COVID happens to be another one. Right now we are in one, that same thing. Everybody is facing challenges with the cash flow and everything else, where investors not enjoying distribution. So we're always coming up with the different things that what we can bring to the table. Now, another, thing is, sometimes people ask, say, hey, you're already busy on those many properties. Why you guys bring it? But same times, we also coming out from these properties, and all of the investors, they also need to, preserve their capital gains that they have. So we have to continuously add the newer properties where we can easily, shelter their gains, and they can enjoying another, investment with us. So that's what the philosophy behind was. We never lost a single penny on the real estate. We may not have made it what we projected, but we always come out ahead. So, that was the reason and vision behind to creating a community where everybody make passively and enjoy life.
So current highlight as to how we embody those, that value system, that notion where Vino spearheaded and started the company, and today, and how we manage in day to day in Terra Equity. So, talk to
Yeah,
us a little
so
bit about that.
we've seen that vision kind of manifest itself through 5 arms. We do pride ourselves on being a relationship focused business. So that really starts at the very beginning where we're brokering relationships, whether that be with realtors, whether that be with, our investors, people that we're purchasing the property from. We know that, the way that we can take this business forward is through partnerships. And that's really our strongest emphasis over there. The second arm is more so focusing on the emerging markets. That's just our strategic route is making sure that there's an opportunity for growth wherever we go. Third is off-market deals. We want to make sure that we can really focus on things, getting them before they go on market, before there's a bidding war on them, and we can get good value for them. And then we also want to create value not just for our investors and the property itself, but also for our guests in this case, and then tenants otherwise. We want to make sure that anybody who's living at a Terra Equity Group property is proud of where they're at, and they can say that the service and the experience that they have is a great one. And then finally, we want to make sure that we're preserving the capital, and Vino really highlighted that really well. So I do want to get into a little bit of our actual core values as well too. I'm just going to highlight them very briefly, but our focus is on family, passion, and legacy. So especially, with family, we treat our investors, our tenants, our guests, we treat everybody as family. We also happen to be a close-knit family ourselves at Terra Equity Group. The second is passion. We really want to make sure that everything that we do, we're putting our best foot forward. And the only way that we could really do that is if we're passionate about it. And then finally, we want to leave a legacy. We want to make sure that it's long-term. We're upholding our values. We're supporting the communities that we build. And as well as basically leave an impact as best as we can.
And on that note, on that note, I like to kind of summarize as to Vino's point that capital preservation in today's day and age, in today's market space, is at the forefront of everybody's mind, and it's great to know that Terra Equity uses that as a guiding principle and as the North Star for the company, so to speak. And we really take pride in that, passionate about what we do. Vino kind of alluded to, we've been through the ups and downs, the 2008, 2009 down cycle. Prior to that was the dot-com boom and bust that came through, and then COVID, and now we're going through this slump in the economy. And Vino, I think, alluded to this point that we didn't maybe make the projected return, but we never lost money. And I like to kind of harp on that point a little bit. Everybody, mentioned that some of the projects that we may be doing, that the distributions have stopped because what the marketing, current market conditions are and the interest rates and what have you. But I'd like to highlight one important point, which, Vino may have forgotten, that never in our career have we had a capital call at any one of our projects, and neither do we plan on. We do the conservative play, we do the long play, we're looking ahead. So we want to make sure that we never get into that situation where our investors' returns are going to get diluted, or their investment shares are going to get diluted and ultimately impact their capital. So again, tying back to that capital preservation, which is a key for us at Terra Equity Group and a hallmark that kind of sets us apart, and it is a feather in our hat. And we like to pride ourselves in that. So yes, we may not have hit on many of the occasions, or some of the occasions, the projected numbers, but we never lost money. We always came out on positive. We never had a capital call, never lost a property to the bank or what have you. So, the track record is solid, and we want to build upon that track record. And that track record is where it is today because of the passion that Vino has and the value that our firm embodies even today, and we, built upon that legacy. So with that being said, I want to kind of uh, jump into the next piece, and I'm not sure. Give me a minute. If my, give me a minute. All right, so we'll do a little bit of the, okay, so we spoke about Terra Equity Group, but a little bit more about our bios here. I'll leave that to you to cover in the pitch deck. Vino, if anything you have forgotten, and I'd like to highlight some of these recent acquisitions we have made. I know the title recent wins can be a little misleading. We have not cycled out of a lot of these deals here. We're in the process of cycling out with some of them. So the most recent ones have been, a recent acquisition, last acquisition, I should rather say, it's been in June of 2022. So, it's been quite some time since then, but again, we're focusing on the projects that we had and we have, and just waiting for the right opportunity and the right project such as this one. And sometimes it takes time. So we weren't rushing to get into that deal because, okay, we haven't had an acquisition in quite some time or what have you, but we wanted the right project, the right mix, and had to make sense. And that's where, this is one that in our backyard. We feel very comfortable about it and we feel very passionate about it. So I'll kind of go sift through some of these. As you can see, uh, the recent acquisitions that we have made and what they're projected to spit out in terms of their returns on an annual basis. Again, you can peruse through these at a more granular level at your own convenience and leisure when you review the pitch deck, and we'll certainly love to answer any questions that may arise. And now we'll kind of jump into this FAQ question. And Raj, if you want to highlight some of the top stuff, again, all of these would be at your disposal, so you can read through them. But some of the, big ones that we want to kind of highlight, Raj can go over, and we'll
Sure.
go from there.
So some of the main questions I get from investors usually is when one of them, I'm just going to cover the ones I normally receive, which is when do you need my money? So as stated at the beginning of the pitch deck, it is on a first come, first serve basis. As soon as you feel you are ready and you've made your decision and you've asked your advisors and everybody that you need to ask, we highly recommend that you come and contact us whenever you are ready so we can start the process for the investment. Another one is, will I be involved in the day-to-day management of the property? Again, no. Terra Equity as a group, we hire top property managers in all of our properties, whether they're local or they're far away. The property managers that are local to the area. So again, you would not handle the day-to-day management of the property. We have a proper team in place that is qualified to do so. And lastly, on this page, it will be, what am I buying with my investment? So you are technically buying shares of the LLC. The LLC is the owner of the building. You are investing in a syndicated real estate, which means you are purchasing the shares or the investment units of said property. Some more frequently asked questions, and some more frequently asked, can you guarantee I'll receive my initial investment back? Like we discussed, like any investment, we cannot guarantee, as all investments carry risk. However, we do our best that the risk is by, acquiring properties in areas with strong potential for the highest return and cash flow rate. What we do is we underwrite our properties very conservatively, and that accounts for almost all types of, unforeseeable things that may happen in the future. So we only go into a property knowing that we will, provide the best possible chance for people's investment. But again, all investments carry risk, and we do our best to mitigate that.
And I kind of like to harp on that last one that Raj mentioned regarding the risk. And again, yes, there's no guarantees in any investments and what have you, but I urge you to look at our track record and you look at, who we have at the driver's seat, a seasoned veteran who has been in the real estate market for since 95, over 25 years and counting. So we certainly have seen the ups and downs. He has the foresight to anticipate some of the things which will help us weather these storms. Certainly the one that we are in, give you an example. We were acquiring some of these last acquisitions back in 22, and he had the foresight to purchase rate caps. A lot of the people on board at that time questioned as to why are you purchasing the rate caps for these interest rates, and said, look, I've been in similar markets before, and I know this market can turn ugly real quick, and we certainly want to again preserve the capital of our investors and make sure our investment is sound. And lo and behold, we in the last acquisition we paid over $1 million to purchase the rate cap, but it bode really well for us because throughout last year the interest rate skyrocketed, past 9%, and because we had the cap, we were able to really weather that storm nicely and still continue to be have the property in a positive cash flow status and done really well in terms of the project and where the project stands today, and we're in a great position to exit once the market corrects itself, and we're already seeing the beginnings of that as we speak. So I believe Viraj, if you want to share some of the reviews, I can stop sharing my screen and talk a little bit. I know I mentioned it before, the Google reviews on the hotel, to kind of see, the community aspect of the value system that we have at Terra Equity Group. We value, our investors, we value even our end consumers, be it tenants, be it the hotel guests, or be it our commercial tenants that we have. So we certainly want to, and just show you an example of what people are saying about the hotel and what's happening here. So.
Sure. And again, speaking on this property, the Fairfield Inn and Suites by Marriott Fort Lauderdale, it's located, in Tamarack. Everybody can Google this and you can search this information. It has 92 reviews with an average of a 4.7 rating. So that's already incredibly high for a property that is not even a year old. And so I'm just going to go over some of the reviews. These are open to you as well. You can do this on a quick Google search. The first one's from Audrey Morguez. She's a local guide, 271 reviews. 2 weeks ago, she left a 5-star review, said, my family loved everything about this hotel. Rooms are new, lovely heated pool, good breakfast, and a lovely sitting area, and rooms are nice. The entire staff could not have been more helpful. We had 4 rooms, and they put us on the same floor. The hotel is right next to a golf course, which allows for a great view, and the golf course has a nice restaurant steps away from the hotel. Now we'll move on to Natalie Falcon. She was here on vacation. It was a couple. They stayed here for 2 nights. The room was clean and very nice. The bathroom was lovely, and I loved the walk-in shower. The bed was comfortable, had breakfast twice, and it was very good. They had eggs, sausage, toast, bagels, muffins, and all the compliments that are all complimentary with your stay. All the staff we came across was nice, especially the breakfast attendant. He was great. Overall, really enjoyed the stay and would definitely stay here again. And I'll go over just one more. This is by Brie Francois. She was here on vacation. We had an amazing stay at the Fairfield Inn. Marcella was the epitome of exemplary customer service. She made my guests and I feel so extremely welcomed and did an outstanding job of accommodating us during our stay. We will definitely be returning to this location. Thank you, Marriott, and thank you, Marcella. So as you can see, the property, brand new, like we mentioned before, cleanliness, organization, and customer service goes a long way in providing, a chance to have a memorable experience for our guests. And the more guests we bring in, the better it is for all investors, better it is for the investment as a whole, and for everyone involved. So that's a good foresight into the property.
All right, so with that being said, I'm gonna bring up our last screen and some final thoughts for with our panelists. In case I may have missed anything, Vino, if you want to have some parting words with our prospective investors and what have you, and kind of go from there. Our contact information is here on the screen. We certainly want you to, if you have any questions, feel free to reach out. You could reach us by phone, visit our website, reach out to us via email. All of that information is up on your screen. We certainly advise you to dig deep if that is something that piques your interest. Time is of the essence. We have a ton of individuals who are interested in this project, as it's one of the latest offerings we've had in quite some time here at Terra Equity Group. So it's garnering a lot of attention and a lot of activity. So if it piques your interest, I would highly urge you to don't wait and reach out to us so we can kind of get you started and answer any questions you may have or clarify anything that we may have missed. I think we have one last question that I want to answer, and then we'll kind of do some final recap with everybody, and then we'll call it a day, I guess, with the webinar. So give me 1 second. Let me pull up the last. Okay, so Arun is asking, will the preferred distribution at 8% for somebody investing 250,000 or above be monthly as well? I believe here, Vino, you can answer that. I don't want to speak ahead of myself. I think we're doing quarterly distributions, if I'm not mistaken. I want to jump in on that.
Yeah, this project is going to be a quarterly because it's in a hotel, and we decided to make sure that we don't, miss out on anything early on. And even though we can promise monthly and we can be able to deliver, so again, keeping our goal in mind, we decided with this project we're going to go with the quarterly distributions.
Perfect. Now I'll kind of go through each of the individuals or the panelists on the webinar today and kind of your parting words. I'll start off with Karan, if you want to go and mention anything that you may have not touched upon or we may have missed as a collective group that may benefit our potential investors or anybody who may be seeking interest into this project.
No, I just want to really emphasize kind of how excited we are about this property. We think it's in a great spot. We've already kind of talked about all the amenities and what's there and all the sites for all of our guests to see. But then we also, or one thing that I really do want to emphasize is kind of how things are kind of already on the right step with this property. We anticipated a conservative 75% occupancy rate for that first year. We're already pushing 95%. And then also, as part of our business plan, we really wanted to highlight the overall guest experience as part of phase one, right? We wanted to focus internally, make sure that everyone's having a great experience. And, we see that in the Google reviews, we see it everywhere that so far we are on track with that. So, it's just, in addition to being excited about the opportunity and the progress that we can achieve, it's also refreshing to kind of see that we're already taking the right steps towards it. So that's just something that I wanted to highlight.
All right, I'd like to thank you for your words. I was on mute again. Viraj, if you could highlight a little bit on your take from our call today and anything that we may have missed. And I want to thank Karan for participation today and thank you for your input. Certainly appreciate the dialogue that we have had today.
No, I think we covered everything pretty much, and you can get a feel of how valuable this property really is. It's brand new, again, clean. It's the first property built in 12 years, 90% occupancy that it's averaging, and based on our numbers, which we've done on a conservative level, this is a very promising outlook that we're seeing with it being 90% as per late. And you can tell by the reviews and the people's feedback on the property that it's something that people enjoy and would love to come back to, and that's a great sign. And I'd just like to say, to learn more about it, please visit the website, terraequitygroup.com/hotel deal, and schedule a call with our team. Thank you everyone for attending. Thank you for having us, and we look forward to having you as a partner on this attractive offering.
Thank you, Viraj. Vino, if you would like to add a few words in before we end the call.
And the only thing I'd like to add is that one, we're planning to close at the end of April. We got 30 days to go. We almost have half of our investment is already people have reserved. So if you are interested, please let us know. And Puneet, if you like to share a link with them for our investor portal, then you can do so here in the chat section, or we can provide separately. So, time is urgency if you decided to invest passively with us. And if you want to have any questions, dialogue with us, you can reach us directly. We have our numbers listed here or email.
Okay, thank you, Vino. I certainly want to take a moment and thank everybody for joining us today, and thanks for the opportunity, and thanks for the dialogue here. Certainly makes it a more captivating, encounter when we have these type of back and forths, and we can discuss and really go through the details as to why some of these projects kind of stick out and what makes sense and, you know, what kind of sets them apart from everything else that's out there. As Vino mentioned, feel free to reach out, and I think we posted this in the chat. Feel free to go to terraequitygroup.com/hotel-deal / right? So that's there. Please go in there and sign up to find out more, or additionally, you can, and I think we just posted a link to the investor portal directly as well, so you can certainly click on that, or type that into your web browser and get into our portal and go from there. So, looking forward to chatting with some of you and conversating with you on the other side. And if you, like I said, if you have any questions, feel free to reach out. We're only a phone call or an email away. Again, I want to thank the panelists. I want to thank Vino, Raj, and Karan for joining us today. And on behalf of Terra Equity Group, as we sign off, thank you everyone for joining us, and thank you for giving us an opportunity to share this with you. Have a great evening.